Hey guys, and welcome back to the channel. Today I want to give you an update on DGOC because we've received some good expected news about the acquisitions, and to be more specific, we have completed the two acquisitions of the Eqt and the carbon energy acquisition. So I just want to give you an update on that, and I received also a question about my thoughts on DGOC in general, so I also just want to go through that as well. So without further ado, let's get started. As always, please keep in mind that I am not a financial advisor. The content on this channel and on my website is intended for educational and entertainment purposes only. First, I want to give you an overall update on what's been going on. First, I took a small break for a week where I just didn't go to my computer and I didn't really look at stocks. I decided to do this because I have, for 2 months, I have basically been looking at stocks and been at my computer for forever, like non-stop. I would wake up and be at my computer. When I was working, I would be at my computer, and afterwards I would be at my computer. So I didn't do anything else. I didn't sit even on my couch or something. I was just sitting at my desk. And I thought it would be good to just go away a bit from my screen. Yeah, was pretty good to do something like that, and I will be doing that more regularly to balance things out a bit. I am fully invested anyway, so it's not like I have the need to search for new stocks consistently or like 24/7 just to be able to distribute my money. So yeah, that's basically why you haven't been seeing a video from me recently. Second, I want to tell you that I improved my website right before I took a break, and yeah, it took me a lot of time, and I just made it a little bit more professional, easier to look at, easier to go through as well. And I'll leave a link in the description below. I tend to just always put my website in the description, but I just want to put it here now and just let you know that it has been improved, and I intend to keep this like clean, informative style of stock research on there, and I intend to also put my YouTube videos there, but some of them have been slacking. I've been slacking a bit in that regard, so some of them haven't been posted there yet, so that's a bit incomplete, but I'm slowly getting there. Like, I'm not a website builder, and this whole content creation is new to me, so I'm still getting used to it, but over time it will get even better. At least that is my goal. And lastly, I have some new ideas, and one of them is that I want to see if I can create like a serious small chat group of people that really want to dive deep into the research of investment. So not just about, okay, I like this company, I'm gonna discuss things about it. No, I'm actually looking to create like a group where we can dedicate time together and we can research the stuff, the companies and all that. And what I'm thinking right now, and if you have any ideas and things that you would like to see in something like that, please leave them down in the comments below. But my thoughts right now are, for example, that to have a regular meeting, like a sort of like some kind of group meeting where we're like 20 people on like a Sunday evening deciding to, okay, let's dive deep into a specific company that everybody has voted on, and things like, okay, I want to dive deep into this company. Sorry. And in that group, we want to have like 1, 2, 3, 4 people that are like the devil's advocate. And those people are like, okay, the only thing that we are going to do is we're going to tell the others what's wrong with this company. We're just going to be the voice that is unheard of, that is like not there, and like it's basically the voice that you're missing when you're doing stock research about a company that you love, because nobody's telling you all the bad things about it. And I think it's very good to create like both sides of a story before making any investment. And I think it is very good to be in a community where there is different people. Every time it's different people that are dedicated. Okay, we're just gonna look for stuff that we don't like about this company, and then we share that, and then you get like this whole mix of views, and based on that, you can decide whether or not you want to further invest into this company. So that's something that's on my mind, and I also want to see in what ways I can create content for you guys that you can use to ease your research. I'm also thinking like some kind of not like a portfolio spreadsheet, but more like a stock calculator or something like that, where you can just put in a few datas and it's going to give you a few numbers, and based on the color you can see, okay, is this something that I would consider good or bad, or like it's basically a bit like my watch list that I shared in a previous video, but then I would like to go a little bit more into the research part and a little less into the broader question part. So that's it for the overall update. Let's dive into the acquisitions. So acquisition 1, the completion of carbon energy acquisition and 10-year amortizing term loan financing. So this is just because we have been dive deep into these acquisitions already because they were expected to come, and as you can read here, it was announced on the 8th of April 2020 and on 12th of May, and it completed the purchase of certain upstream and midstream assets from Carbon Energy Corporation, also known as the acquisition. They also closed their amortizing loan, senior secured term loan, and yeah, this is basically just telling us, okay, things are looking well, we have secured the finances, we do not have to worry about banks going like, okay, well, you know what, we're not going to loan you any money anymore because or lend you any money I should say, because it's too risky right now with the current market environment and stuff like that. So this is just very positive news. Obviously, I'm not that worried about the amortizing term loan financing because they are in contact with like a gazillion banks. No, I think it's about 17 or something. So I think that they will always manage to figure out something like that. The question is, like, can they get a nice fixed coupon rate? But this is a pretty decent rate for this kind of business. And yeah, like obviously you'd rather want this to be as low as possible, but I think compared to what I've been paying in the past, this is not that bad. I think it was recently it was even just a little bit higher than this, and before that it was even higher, and the most costly price that you will ever see is when they use equity to finance acquisition. So I'd rather see like a loan with a fixed coupon rate like this. So there's a few highlights here of the acquisition. They have a PDP reserve of 74. There is a present value of about 189 million. So if you look at what they pay for it, then yeah, you get your money's worth. So they probably have a little bit of a discount to their net asset value, which means like, what was the number that they bought it? Maybe we'll get to that later. I think it was here below. Let's go a little bit lower. For the acquisition and at closing, DGO paid net consideration of approximately 98 million, and there was 110 million gross. And they had a adjustment for the price because they had an effective date of 1st of January 2020. I really like this part because this means that this acquisition was basically implemented as of the 1st of January. But it's not gonna be like, okay, if it was the 1st of January, we would have had a higher production. No, it's more like, okay, this is what it would have generated, but we're just not gonna pay that money. So we're basically getting a discount to the acquisition. Is that a big difference? I think for many people may even think that they don't like this. They had rather seen it that they have just acquired it on the 1st of January for 110 million gross, just so they could have the dividend payments that would be increased. But I like this more because I'm not a dividend investor, I'm a growth investor. And I think that because of this deal, they're going to pay 2 months less of dividends, 2 quarters less of dividends basically. And that will result into a better growth of the business. And something that they added here is that it is going to increase, or they have a chance that if the gas prices go up, that they have to pay like a bonus to the acquisition so that both parties can benefit from a potential increase in price of gas. I think this is only fair. I think if you want to buy good assets, you have to have a deal like this, because otherwise people will not sell their proper assets. So I think this is just fair play, and if it doesn't increase, it's still a very good deal. But let's get to the deal right now. Sorry for all the movement. For the next 12 months, they expect the adjusted EBITDA to be between let's say just $30 million. And if you think that the price they paid was 98 million, let's say 100 million, that means that in about 3 years and 3 months, they will have their money back. Based on EBITDA, obviously not literally. But and that's also something that you can see here, that they paid like a 3.2 point or a 3 point, between a 3.2 and a 3.4 cash multiple. So that's a pretty good deal, if you ask me. If I could buy something and it will pay itself back in about 4 years, then that is a pretty good deal, and now you get it even at a better price. So I think you can expect this to have like a growth rate of, let's say, on the safe side, 25%. I think that's fair for the amount invested, I mean. And yeah, this is just the added production, which is about 10%, I believe, of their current production. So it's a 10% production increase, that's what they already have. So that's very good. Something I really like about this part is that they get 4.7 thousand miles of midstream assets, meaning that they can optimize their production, or their costs, I should say. Not the production. They can optimize their cost, they can lower their cost, and they can just optimize the way they stream it or they send it to their customers. So it's great. And you can see here another cost benefit is that they have a synergy in the field operating expenses and general and administrative, achieved by retaining 80% of existing carbon workforce. So they actually took over some of the carbon workforce, which also makes me think that they maybe just bought the entire company, or at least a big part of it. But 80% means that there's a 20% reduction in cost compared to what carbon was using. So that is already looking good as well. And this is one when they have already mentioned the Eqt Corporation, and that the production will be 112, which is about a 23% production increase. But this part is about 10%, so let's stick to that one, because we'll get to the next one in a bit. On to the second acquisition, which is the completion of the Eqt Acquisition. I realized that this one is on the 26th of May, so this was actually the first acquisition, so I did it in the wrong order, but so close to each other it doesn't really matter. It's an honest mistake. So let's get to it. It is basically a little bit of the same, at least the start. Like in this case, it was announced on the 11th of May, and yeah, a few weeks later it was already completed. So I think they had some due diligence done before this already. But they announced something else as well, and that is that DGO is also pleased to announce that it has secured a commitment from Munich Reserves Risk Financing, also known as MRRF, for the term loan financing for the acquisition. The company continues to advance towards completing its diligence and closing the previously announced conditional purchase with Carbon Energy. But we already know a day later that it was completed. But yeah, the wrong order, I told you already. So let's see what they paid for this one first. So they paid a 112 million because it has an effective date of 1st of January as well. It's the same thing. It's like a small discount just because they've had some production benefits already. And yeah, I prefer this over an acquisition at the 1st of January because yeah, I don't like the dividends. Or I do like the dividends, but I don't mind not getting the dividends if the company keeps growing because of that, or growing even further. So that's the price that we know, and yeah, keep in mind that they also have the same bonus deal for Eqt, and yeah, makes sense again to me. It's basically the same story as what I just told you. So let's just go to the acquisition, and you see here that they get a present value of about 185 million. So another net asset value deal where I'm like, okay, we're gonna have a increase on the balance sheet, and we're going to have an extra bonus on the income statement. Sorry, couldn't come up with a word there. And so what has happened here is that they have an adjusted EBITDA of 32 or between 32 or 34 million, and that is almost the same cash multiple as we just saw. It's instead of 3.2, 3.4, it's 3.3, 3.5, so pretty close to each other. Production increased with about the same length, 10% again, approximately, so a 20% increase in their production. But keep in mind that even though production is increasing by 20%, they are reducing their cost overall by another percent, meaning that they are going to have a higher percent bottom line increase than what we've seen in 2019. They are not really any midstream assets that they achieved here, and they are relatively few wells if you compare it to what they bought previously. They were like over 6,000 wells that they bought from Carbon Energy, and now they're only buying 67. But these are horizontal producing wells, and these are very relatively new, so they have like a higher decline rate, but they also have a higher production rate at this point. And something interesting is that the additional upside opportunity from 13 presently non-producing horizontal Marcellus wells, which DGO will pursue returning to production, and to which the company allocate no value in the purchase price, estimated reserves, PV10 value, or NTM adjusted EBITDA. So what does this mean? This deal on its own is already a very good deal, but there is some upside because there are already 13 non-producing wells, and they could activate that again and increase the production even more. I don't think it's going to be like a insane increase. Like I don't think it's going to be like 13% or let's say 15%, something like that, from if you compare it to the 80 total. But yeah, like even a 4 or 5% production over the next few years would obviously be very good. And you could also think of it like, okay, these wells are declining, but if they like the production of these wells are declining, but if they install these wells, then it basically fixes the production reduction. That's a very weird combination of words, but that's basically the case. So, and in what way the production is going to be reduced? That's being, how do you say that in English? I forgot the word. It doesn't matter. It's going to even out. So if you have a 5% decrease, but you plug a new well, or you unplug a new well, I should say, then and that increases it with 4%, then it basically evens out. So I don't mind this acquisition. It's a very good acquisition, and yeah, as I said before, these cash multiples are great. So that's for the two acquisitions. Let's head over to the next one. And lastly, I would like to talk to you about my thoughts on DGOC. So what do these acquisitions mean? Well, first and foremost, I think most people will like to know that the dividend is very likely to increase, since they have a very firm dividend policy that is 40% of their free cash flow, and their free cash flow is about to be increased with about, well, I guess 20%, not taking into account their share dilution for now. That means that the overall dividend payment is going to increase by 20%. However, we've seen a share dilution of about 10%, so effectively we can see a 10% dividend increase if you are a long-term holder of DGOC. I'm not complaining with a 10% dividend increase. I think that is very good. If you look at all the competitors, nobody can beat this. Nobody can deliver this. You've seen Shell, you've seen BP, they're all reducing. I'm not even sure about BP, but I'm very certain about Royal Dutch Shell that they have been decreasing their dividends, or reducing their dividends, however you want to call it. So this is just a very good thing that is happening right now. So something that people don't really realize is that there's still room for more acquisitions. So they have a very strong balance sheet policy, which is that their net debt to adjusted EBITDA has to be between 2 and 2.5. Because they did a share dilution, they acquired two of these companies, and their net debt to adjusted EBITDA is still on 2.3. meaning that if there's an acquisition that is very lucrative and very attractive, they can get it up to 2.5 with loans. So there's still room, and I know that they're still looking for that, and they may actually acquire further away from what they're doing now. The CEO mentioned that as well. So yeah, we'll see what happens, but it's gonna be it's looking pretty good. Like I really can't complain about these good news that we've seen in May already. Like this is not the only good news, obviously. We've also seen that they're going to the main market. We've seen a pretty good increase lately. Like even I am profitable at this point. So yeah, nothing to complain about. And yeah, the fact that there's still room for more acquisitions in 2020 is pretty insane. Well, it's not all positive, I guess, because yeah, I don't like really a share dilution, but what I do like is that they have a stronger company policy. So what do I mean with this? So they did share dilution to get the acquisition done, but to also protect the balance sheet. Do I think that was completely necessary? No, because I think this management is very competent, and I think that they will manage even if it goes to net debt to adjusted EBITDA of 3 based on the rating and the growth rate that we have seen. And with rating I mean the coupon rate. So yeah, I think they could go up to 3, but I like the fact that they are like, no, we have a strong company policy, we're not going to divert from that, and we're going to stick to our plan. Basically also why I can appreciate the dividends, because I don't like the dividends, but yeah, if they have a strong company policy, then yeah, sure, I'll accept that. And I am less worried about share dilution when like 8 people in management suffer the same share dilution as I do. And with I also mean all of you who decided to invest in this company. So not much to complain about in that regard, and I think that as long as they have their own stake or like a high incentive to make the company grow, then a share dilution is not necessarily that bad. However, I would rather see it increase, or that production increase, with debt or with just cash that they have on the balance sheet. But yeah, you can't have everything. And lastly, I would like to go through a viewer's question. So Tim Thuis mentioned, whoa, impressive to be almost one up on ex-dividend day. So what he's referring to is that we had an ex-dividend day a few days ago, or 5 days ago, as you can see. And what happened, the dividend was not paid, but it was basically put aside. So what you see usually on a dividend day is that you see, okay, if it's at 100 and they pay a 5% dividend yield in that quarter, so let's say it's a 20% dividend yield, then the stock would decrease by 5% just because the cash goes out of the company. But we've actually seen a increase in stock price on a dividend day. Currently it's trading lower. I don't think it's that important because it's all short-term fun. But yeah, it was impressive to see something like that. You don't see that often, but at least not for small companies with a high dividend pay rate, high dividend yield. And he asked me a question just for fun. What do you think the stock price of DGOC will be by the end of the year? And this year meaning at the end of 2020. So you all know that I do not think that is long-term investing. I do not know where it's going to be. But I do like to think about these things, and I can answer it for you. I think it's going to be between 125 and 140. And why do I think that? I think with the dividend increase, with the cash flow increase, and with the worst part behind us of the oil war, I think it is very likely that this stock price could go up. We will see the gas price probably increase early next year, maybe at the end of 2020, and based off of that, people will start to be more confident in gas price or gas companies, and we could see stock price increase. Do I think this is a guarantee? No. I still think the current price is attractively priced for this company. I am not that sure about that share price prediction that I did. Why not? Because it's short term. I don't know what's going to happen short term. I don't even know what's going to happen long term, obviously. But what I do know is that right now the price is undervalued, and it is gonna increase at some point to the mean. That is my belief. I'm not certain in any of that, but that is my belief. And if it doesn't, then I like the dividend payments a little bit more than what I just said. But yeah, I think it could also stay around the 100 mark. It could also go up to 160. It could even go lower than 100. I never expected the stock to go below 60. It did, but yeah, stuff like that can happen. But I think a reasonable projection would be between 125 and 140, which would be approximately a 20 to 30% increase from current share price. And I obviously do not take into account the current dividend payments. So that's it for today, guys. I hope you guys enjoyed it. If you like this video, please leave a like. If you haven't already, please subscribe to the channel. I now notice that I used the... never mind. I can still adjust that. Yeah. I will leave a link in the description below to the website. And again, as I mentioned in the start of this video, please let me know what you think about the idea that I suggested, and also let me know if you have any other ideas that you would like to see in a small, serious community. And with small, I really mean like, yeah, obviously I don't have I really enjoy everybody that likes DGOC and really likes my content. But obviously I have not a YouTube channel with over 10,000 subscribers. So I am looking to have it small, but even if this channel were to grow, I would still like to keep this group very small, to have like just a very serious investment group. And with small right now, I mean like 20 people, 20, 30. And even if I would go to like 100,000 subscribers, who knows, I would still like to have this group no more than, I'd say, 500 people. And if it even goes that high, I don't think it will, but who knows, you never know what happens in the future. If it goes that high, then I would like to have several groups, and that you can select companies that you would like to discuss and so on, and have groups and make your own days as well, and do it as a community, and just really find like-minded people that really want to invest seriously and thoroughly, and just do a very good due diligence, not just like DGOC on their acquisitions, but basically on your own acquisitions, also known as the companies that you buy. So that's it for today. Hope you enjoyed it, and see you guys later.